Hi, traders, and welcome to the weekly market review. I'm your host, Paul. We're going to look at the stock indexes and several stocks using wave analysis to see where price could be headed. So, with that, let's get started. We're going to start with the upcoming economic calendar, and should be impactful week this week. Monday, light day. You do have new home sales and Dallas Fed manufacturing. Nothing too earth-shattering there. Tuesday, you got durable goods and some more home price and consumer confidence. Nothing on Wednesday. Thursday, you do have GDP. And Friday will be the big one, core PCE. So I think Friday will be the big one because of the recent bias of inflation just slowly ticking up. Now they're expecting it to actually slightly tick down 0.1%. So if that happens, obviously then the market's gonna, I think, have a big sigh of relief that the recent slight rise in inflation, core and just regular inflation, that might just have been a little 2-month blip. So let's see how PCE comes in and the market's reaction. So mainly I think just GDP and PCE might be causing some volatility. All right, let's get on to the chart. Going to start with the S&P, and last week I said that high right there should hold. Well, that was obviously not a good call. Now I thought that this was a diagonal right in here. So 1, 2, 3, 4, 5. And that's why I thought this ended something. So I thought it was, because this is the only impulse that I can see in this entire structure coming up. 1, 2, 3, 4, 5 to there. Oops, right up to there. So I thought it was just a really kind of a straight line correction and then ending diagonal. So I thought it was just a big 1, 2, 3. But then they came down, and I still think that this movement here, when I count the waves, it was 5 waves down. So I guess it's possible that this could be a correction. It could be a WXY triple combo correction XZ. And then this is a running flat. So for right now, I'm going with that. There's a couple other patterns that could play out. But I think this, based on the action that they did after this, what I have running flat, because it's just a bunch of 3-wave moves. So it was 3 to there, and then obviously 3 down. And now we got 3 up. And so I think they're going to make an ending diagonal. Now, there is one other pattern here that, if I'm right, that this is a diagonal, that maybe this is going to turn into be a running flat. It'd be kind of a weird pattern, I got to admit. Because then this would be the A wave. This would have to be like WXY, and then this would have to be a really sharp sell-off. So if this sell-off that's already starting gets real aggressive and comes down to about here, 52.20, let's say, pretty much, very impulsive, and then goes back up, well, then I'll see this as a running flat right here. But I think, based on what I see in mainly the Nasdaq and some of the big tech stocks, everything looks more like they're in a diagonal structure. So that's why I got this labeled like this. So I think, you got 1, 2. This was a running flat. Then I think this somehow is a running flat. 3, 4, and now they're making an ending diagonal. And we got the 1, 2, and 3 in, So I think they got to pull back a little bit more than they already have in a three-wave movement, you know, maybe down to, it's hard to say, 52, let's see, yeah, about in the 50s, you know, so not a whole lot more, maybe what, 30, 40 points or so for four, and then go up in three ways for the fifth wave of the fifth wave. So I still see one more up than in the S&P. But this wave will really help tell what the structure, if it's only three waves down into this, you know, 52, 40 to 50 range, and then they go back up, then this is a diagonal. Well, it's a diagonal. And I think it's an ending diagonal. I can't imagine that. I don't know what else, if that's a leading diagonal. I mean, this thing's never going to end. So that's what I see on the S&P. So it's got to correct a little bit more for four, and then go up three ways to complete that fifth wave. Now, when we look at the Nasdaq, it's definitely much clearer. The S&P. Let's go back to the S&P. I mean, basically, let's go to a 4-hour chart, and we are just in a complete channel. So you go way back here. So what was this point here? January 4. So that after that, you know, those first few days of selling in January, ever since then, we've just been riding up in this channel here. It's a very easy channel to see, right? So it's like once this channel breaks, once we get a break below this channel, this whole structure then will be done. And so, I mean, I think that's just going to be the easiest way, because there's actually several ways to count all these waves. It's for the S&P, it's been kind of hard to count, because there's just a lot of little three-wave movements. I only see one impulse and then, you know, several running flats. So basically, as long as we're inside this channel, and like I said, I still think we got one more up. It'll be when they break this 53.22 high. There should be a point where we come and break below that lower band. This upper band actually doesn't even matter. We can take that off. When they break below that band, actually maybe, yeah, something like that, you know, break below there, that's going to be a good indication that this entire move up is finally done. So not until we get that, it's just, you know, buy the dips. So that's the S&P. That's how I see it. One more correction, and then one more up. And then when we look at the Nasdaq, they're still in this ending diagonal, and so they completed the 4 on the 15th. And I see still more up, even though they broke the high of the 3. So technically, you know, once that breaks, you know, I'd be saying, you know, you got to be careful, because at any moment this fifth wave could be done. But I'm going to zoom in here. So if we got the 1, 2, 3, and 4, we now need the fifth wave, and it's got to be 3 waves. Now, there are 3 waves. I do have to say this, that there are 3 waves. It's 1, 2, and 3. So if this correction here gets much more aggressive selling, it is possible that the fifth wave is in. It looks to me that they're making a leading diagonal. And so we've got the 1, the 2, and now the 3 is in. And I think that they're creating the 4. And to be honest, the 4 might actually be in already, or it's got one more break of that 18,492 low to create the 4, and then go up for the 5, and that all in all, that'll just be the A wave. Give a correction, and then still one more up. So I think we're breaking 18,709. I think we'll break that two more times. So the first time to finish the fifth wave of the A wave, we'll get a correction and then one more up. So I think this is going to take a while to play out, but definitely need to watch this price action here. It could come and break 18,492 one more time. You know, maybe get down, you know, 18 low 18.4s. But if it starts getting down into like underneath 18.3, then that might, unless they're making a really huge diagonal, I don't think so. Then it might be possible that they finish the fifth wave. But my bias is towards still going up. So, but this wave will tell us. So like I said, if you start to see them getting into the 18 low 300s, I'd be starting to get worried. But I think even if they break 492 one more time, it should just be a good area where buyers will come back in, because I think that'll be four, go up in three ways to complete that fifth wave, and that'll be the A wave. And then, like I said, correction, and then still one more up. So that's the playbook. Just watch, you know, buying anywhere down in this range to play for the fifth is good, but you just got to know that if this gets pretty aggressive selling, I'd be really hesitant to hold on to that trade then, because it could be that this fifth wave is done, but I don't think so. And the reason for that is when we look at some of these tech stocks that we've been looking now, AMD, like I've been saying, I do think AMD, their fifth wave is in, and they're getting really close to confirming that by breaking this 161.80. Now, I think this needs a, you know, this is a pretty good sell-off already, from 227 down to what they get down to 174. So I think this needs a bounce, you know, corrective, and then they'll start resuming down. So I think even when the Nasdaq starts to go up, AMD, you know, should be going up, but it'll be just for the correction, and then at some point, then they'll come back down, and they'll finally break this 161 to start the correction for AMD. And then when we look at Nvidia, I still think Nvidia's fifth wave is not in. So I got to slide this over, because I really only see this fifth wave as three waves. 1, 2, 3. And so I think what they're doing for this fifth wave is creating an ending diagonal. And this was just one of 5. And I think, I mean, there is a little three wave here, like I said. That could be 2. It's kind of a really quick, shallow 2. I think that's just the A wave. I think this will be B, and they'll come down one more time, and that'll be 2. And then they'll go back up for 3, 4, and 5 in a diagonal format. Now, like I said, just like with the Nasdaq, if this selling gets really aggressive, and obviously if they come and break 662, then the fifth wave is in, and Nvidia's starting a really big correction. And so then you got to figure out something to do to hedge if you're already long, you got to have some kind of hedge, use some options to protect yourself, because this correction could be pretty big. So 662 is the line in the sand, but I think there'll be one more drop just to get below that low. What is that? 841. You know, so like somewhere like 818, if you're not already in and you want to play for Nvidia, I think 818 is a really good area to go up for the third wave and get above 973, which then means that obviously Nvidia is going to 1,000. So, and that kind of lines up with what I see in the Nasdaq. That the Nasdaq probably has, you know, a little correction coming. You know, creating that A wave. So, you know, there's still more up, and it's going to be choppy, but it's going up. And I think that's what Nvidia is going to do. It's going to go down, and then it should resume up. So this down wave in all the markets will dictate, because if it gets really strong, then the fifth waves are in for everybody. But I don't think we're there yet. And then when we look at something like Google too, go out to a 4-hour chart. There's a couple ways to count this. I think the way I've got it labeled, that they had a leading diagonal up to here. I think this is a running flat. So that's one, or I think that's A, and I think this is B, because this part right here, they're going up correctively. A, B, C, and then here's a 3-wave move, and they're gonna break that high, because I don't see any pattern that the high is in. So I think what this is going to be, this was A, this is B, and then this ABC, that's one of a ending diagonal. And this was 2, and now they're going up. They'll break 153, and that'll be 3, and then they'll come down for 4, and then they'll go back up for 5, which lines up exactly what I see on the Nasdaq. And so that's why I've got just a bias of just more up for like Nvidia and Google, because of all these wave counts, they're not complete to finish their up moves. Even like Microsoft, I looked at this one, and they're in the fifth wave, because I do see 1, 2, 3, 4. They're coming up in a really big diagonal, and I just see 1, 2, and 3. So I mean, it could be, I think that's just the A wave, get a correction, and then still more up for Microsoft. Not a whole lot more left up for Microsoft, but I do see them going up after a correction, going up at least one more time. So that's how I see the market. I think everything needs a correction, but there's still more up. And the Nasdaq, I think, needs to go up, you know, like I said, to get that diagonal done before a correction happens, and then still more up. So that lines up with what I see on all the bigger tech stocks, that they're just not done yet. They still have more up. All right, that's what I see. Hope it helps. Thanks for your watching, your likes and support, and I will see you in the next video.